Today in the grain market, soybeans were higher. Those lower prices are improving export demand, and as well as the money managers are reducing some of their net short position, giving the market a little bit of lift. The November futures were up 17 and a half cents. We got up to 974 and a half. And we're still really just about 20 cents off the contract low. So while we're doing pretty good today, we've got to be watchful of that. And we're also in harvest season, so that usually is adding a little bit of pressure on the market right now. Not much happening in the option open interest right now, but the target on the upside would be 980, so we've got a little ways to go there. CVOL is at 19.3% with the soybean oil at 34 and the meal at 25. Now, corn did also firm up. There's just no rain in the corn belt right now. And it has these futures up 7.75 cents. We got up over $4 and a quarter. We're holding really around that $4 mark because it is a major support level. Every time it gets below, it starts to claw its way back. Demand is still strong, but investors did add to the net short position. So we have to watch out for that, especially since it ended a 4-week of declines in bearish positions. So things are kind of changing pretty rapidly right now. Option open interest did add 3,300 to the call side, and I think that that's kind of letting you know that perhaps we've reached an area that's fair value, certainly for the corn side. CVOL is at 21.4%. Wheat today was steady. There is concerns about that Canadian rail strike that would drive export business to the U.S., so that'd be helping the market. However, futures have really been mostly sideways right now with the Paris milling wheat, kind of lower prices there. That Ukraine production is up from what the forecast is, so that's a little bit of bearish news that might maybe put a cap on any kind of significant rally going forward. But right now, the September contract is still staying in that same range between 520 and 550. And as we're going to start to move to the December contract, that range is going to be between 540 and 580. So it's pretty much staying right there. Interesting to note that the options really haven't migrated to the December as of yet, and they're still adding a few more calls to that September contract, even though we don't have much time left on that. But CVOL for the soybeans is at 29.6%, and all of the grains have been just a little bit lower. Now, we have economic reports coming in this week, and that could impact all the grains, so we're going to be watching for that in the next couple of days.